give a breakout or even a breakdown for that matter, because they seem to be shrugging off all news.
Yeah, good morning, Aisha. Thanks for having me. I think it's not a bad thing that you throw a bit of a pause or a time correction. And the basic structure of our markets, the earnings picture, on the regulatory side, we have lots of positive developments. I think the only issue at this point of time is that you have a bit of uncertainty because of the geopolitics. The crude price is going up a bit, which eventually should cool off as we see more stability on the geopolitical front. So not too worried about this pause as such. I think flows picture and the earnings trajectory from here on for next 2 3 quarters looks positive, and to my mind that would be a big trigger for the market.
But Hemang, we are seeing a lot of these defensives now making a comeback. IT has been doing well. Select FMCG counters are making a comeback. So give us some sense there. How do you see the other sectors participating, and what's your take on FMCG and IT as a pack?
Yeah, so market would always have this phase where you see rotation come through. At one point, the banking was showing the leadership, and let's say last about 3 to 4 months, we had the entire pack, including NBFCs, doing well, but there is a bit of a pause, post this RBI policy. So I sense is that IT as a pack, people are turning positive because the earnings picture this quarter will look better. In the US front, we think that things would look better in discretionary spend and see a bit more uptake. So IT definitely, we are positive, and we think that from a near-term perspective, some pockets could do exceptionally well. FMCG, I'm not a big fan of that space. You may see a bit of a move here and there, basis either monsoon progress or some companies delivering reasonable numbers, but high valuations and the fact that there is nothing exciting about the growth. So we are not too excited by that. But I think cement be one space where we continue to be positive because we think that next 1 or 2 years we'll see a significant up move in the margins trajectory as well as the earnings.
Interesting. Hemang, let's talk stocks, and I want to talk about trends. The company at their analyst day has set a very aspirational target of 25% long-term revenue growth. We've seen the way the stock has languished from those, lofty levels that was quoting at about 6 months back. From there, there's been a very, very steep correction. But do you think that they can actually head to that 25% revenue growth? And what will move the stock price from here?
Fact is that in the entire retail stroke discretionary spending, this is by far the leader. And even when the overall consumer environment was not so good, this company could deliver either in the form of Zudio and even the other formats they have continued to deliver. So market does not mind paying higher valuations for somebody who comes up with innovative concepts and is finally able to execute well. So I do think that this company can definitely surprise you on the growth side with all these newer launches, etc. Not too much worried about valuations. You may see it's a high beta stock. Sometimes on a bad day, it may correct 5, 7, 10%. But overall, extremely positive view on trend.
The range-bound movement for Trent as well continues, right? What do you see on the charts?
Yeah, nothing much in terms of the change for the structure. The stock is still stuck into a range. I think 4,750 was the low the stock had made in the month of March, April, when the sharp correction started off for Trent. Post that, the stock went to a recovery mode. Came back to I think 5,900 thereabouts in the recent highs, and now settled back again to 5,700 mark, which means that the stock is just about trading or grinding into this 800 to 1,000 point of a huge range over the last 3 to 4 months. But I believe that that with momentum indicators showing some slight of some signs of recovery, there could be a chance that you might see the stock heading towards a minor breakout. Now, the only concern is that the momentum which was seen for trend in 2023-24, where the stock used to go into like, those 10-15% kind of a sharp swing on a regular basis, I think we may not see that kind of a trend for the stock price, at least as of now, in the very near term. So you may see a very gradual up move. The stock becomes more like a buy on dips rather than buy this or catch this on momentum kind of a trade.
Fair point. Let me take it across to Varun as well and get in more highlights from the investor day of Trent. Varun?
Definitely. So Trent has an investor day yesterday, and the company has again reiterated its overall long-term revenue growth target of around 25%. So that's good. And this would be basically driven by multi-brand cluster-based approach to increase its market share in the micro markets. Although from FY29 to FY25, the company had good growth, but yes, the overall market share, if you look in the retail industry, it's still low single digits. The management has said that the segments such as Samo and Zudio Beauty are yet to prove their relevance, and thereafter management will focus on blitzscaling both of this segment. They also say that the company is not interested in distributing third-party brands, and the company has enough headroom to drive the overall operating leverage in the business. Star is going to be the star format is going to be the focus of the management going ahead also, because the company sees a good opportunity in this segment, and the management has said that they would not chase numeric milestones in star format. And in star retail, the company has said that the overall building scale in the segment would be in the long-term process and potential spanning decades. Also, the company has said that overall the CEOs majority of the time would be dedicated to star format, although they would be emphasizing on other segments as well. But technology will be again one of the things that would drive the overall growth of the company, including the star format. The company also continues to deepen its India focus strategy, India first strategy, and its focus will be on own labels, and the company would be scaling many new brands in the next 5 years. Brokerage houses have come out with a report on this. Now Nuvama, they have raised the target because the overall investor day actually increases their confidence on the stock, and that's the reason they have increased the target from 6,224 to 6,627 now. They have a buy call in the stock. Motilal has a buy call with a price target of 6,900, and Antique also has a buy call on the stock with 6,646 rupees.
All right. Thank you so much, Varun, for getting us all those details. So those were the key takeaways with respect to Trent Investor and Analyst Meet. The long-term revenue growth target stands at 25%. But other than that, Hemang, within the retail space, we are seeing renewed investor interest coming in, because just yesterday we also saw a stock like DMart surging anywhere between 3 to 4% in a weak market, and that was after their new expansion in Uttar Pradesh. Give us some sense that how do you see the stocks going ahead? What are the factors at play? And at this point in time, are the valuations comforting?
So I think DMart has started doing well in the last 2 months after almost underperformance for 1.5 years. But my feel is that even if they introduce certain categories and formats, the valuations continues to be on a much higher level for a growth which is 16-18%. And see, this space is also getting competitive with deep pockets coming into play. You have quick commerce which can also disrupt some of these guys. So not a big fan for buying something which is very expensive when it comes to DMart. But coming to the retail, place per se, we have a very strong, positive bias, Eternal and Swiggy, because we think that the competitive intensity is coming down, and you will see better positive surprise on the margins and even on the gross volume front for these two companies.
One of the top movers yesterday, and that was IndusInd Bank, shot up about 5% in an otherwise lackluster market. Nomura, of course, upgraded the stock and increased their target price as well by a good 50% from the earlier 700 to now 1,050, upgrading their rating from neutral to now a buy. And the new target, of course, implies a potential of a good 30% from the current market price. Hemang, do you think post all those issues on IndusInd Bank, You think it's all in the price now? The stock is corrected enough, and does it become a buy at all?
It's a bit difficult to say that because while most of the negatives are known and priced in, it remains to be seen as to who is appointed as a CEO, whether we have the overall in terms of the new team being put in place, and most importantly, what kind of growth are we really looking at? And within banking, it's not as if that IndusInd is available very cheap, but you have many other banks in the tier 2, tier 3 categories which are available at a similar valuation without much of an uncertainty. So I may be a buyer from a tactical point of view because of the kind of underperformance that IndusInd had, but certainly not very comfortable buying this for a longer term.
Reading that on the charts as well, do you think IndusInd makes for a good tactical buy? In fact, why just IndusInd? I mean, yesterday you had the likes of an RBL, Bandhan, all hold up.
Absolutely. IndusInd Bank with AU Bank and one more Federal Bank was doing great. These banks are looking great in the very short term. Specifically, if we are talking about IndusInd Bank, it has taken support at 20 and 40 daily moving average, and I think from here on, in the very short term, not in the medium term outlook, because in the medium term outlook, IndusInd Bank is struggling to go up past 200 daily exponential moving average. But in the very short term, a good spike up and has taken support at 20 and 40. I'll be aiming for 970 targets with a stop loss of around 806, 805.
Right. Okay. In other news, SEBI has announced a slew of measures in its latest board meet, which concluded last evening. The regulator now introduces special delisting route for PSUs with 90% or more of government holdings. SEBI has also given investors higher flexibility to co-invest in alternative investment funds or AIFs, also easing curbs on ESOPs for startup founders. Ankur Mishra is here with us to get us more details on the outcome of the SEBI board meet last evening.
Yes, in a series of steps which have been announced in SEBI board meeting, SEBI has now decided reforms to focus on PSU delisting. The norms have been announced when the government shareholding is more than 90%. The chairman also specified that there are only 5 PSUs which will be in this criteria. In fact, these delisting norms have been brought because there are many companies where float is less, or this option can be availed by the companies. Apart from that, there is also announcement of easing of a restriction on employee stock options for startup founders after listing, and they have been permitted, but there is a rider of 1 year which has been given to them. Apart from that, especially in the PSU delisting criteria, which owns majority stakes in several PSUs, has been pursuing strategic exits. There the new norms would help as per SEBI chairperson, and greater flexibility for AIF for co-investment has been provided under new norms. There has also been announcement regarding foreign investment in sovereign debt and special categories where a simplified framework will be there for them. The kind of ease of doing business has been kept in mind for these regulations. There has also been comments which is coming from SEBI chairman regarding the F&O trading, and once again it has been reiterated that whatever the steps have been taken, the SEBI is continuously studying the data. If there are more steps which needs to be taken, that will be taken by the regulator. However, the study is continuing on how much loss actually investor is making, but the regulator is not against derivatives that have been specified.
Certain regulatory requirements for all existing and prospective FPIs that exclusively invest in GSECs, and we will refer to them as GS FPI, will actually face less regulatory requirements. As you know, there are several global index providers have announced inclusion in GSECs in their respective bond indices. And FPI investment in FAR eligible securities has seen a significant increase and has crossed 3 lakh crore mark in March 2025. So certain regulatory requirements specified for FPIs under the FPI regulations and circulars issued there are applicable to FPI investment into equity and corporate bonds and not relevant for investment in GSECs. In this context, the below mentioned relaxations are expected to give a fillip to FPI's investment in government securities.
All right, but with this, let's get back to the stock-specific action. And today, all eyes will be on Laurus Lab as well, because in USA, it was Gilead Sciences that got an FDA approval for twice-yearly HIV prevention drug, and this is one of its kind drug, first and the only twice-yearly option available in the United States. And back home, one of the stocks that will be interesting to watch out for will be Laurus Lab, because as we know, Laurus Lab has almost a 46% contribution coming in only from the ARV segment, that is the API for these HIV drugs. And Hemang, just wanted to get your sense on this, because of late Laurus Lab as a company, as a stock, that has been doing decently okay in terms of recovery in their margins as well, and along with that the stock price performance. But do you believe that this news flow can impact the stock and the company in any way?
Yeah, so I think some of the API companies have started doing well, and Laurus in particular, after subdued performance for more than 1.5 to 2 years, now it looks like the earnings growth could look much better with slew of launches. Even the API business per se is looking much better in terms of price and volume both. The issue here is that if we have the news on the tariff on the pharma companies, then you may see a bit of a knee-jerk reaction like what we've seen in the past couple of days. But I don't think there is going to be any materially negative impact on the pharma companies per se. So our preferred picks would be, apart from Laurus Lab, I think Divi's is something that is looking quite interesting, given its business model, contract manufacturing side, and the expansion which they have completed. But the large generic plays, we are not too sure. Something like Sun, Lupin, we are avoiding at this point of time for want of further clarity on the tariffs.
Right, okay, that's that on the pharma pack right now. Just looking at the texture of the market, and yesterday you did have a bit of a move come back in the auto pack. Remember, auto didn't quite participate in the move in the markets, post-policy at least, even though it did aid the auto sector because of their entire rare earth mineral issue. But Hemang, do you sense that autos could finally tread back and maybe now catch up with the rest of the rate sensitives?
Yes, I do think auto selectively should do better. Better monsoon. I think on the rural side, what we are hearing is that the traction should be much better, and particularly when you enter in festive season, you will see the kind of growth that one can really look at the current scenario. So we do like auto, but given the high base, it may not be across the board kind of that we could see. So Mahindra is something that we've been liking, for their overall growth trajectory of 20-21%. I think Bajaj has corrected quite a lot. It's trying to stabilize around these levels. The monthly numbers continue to be reasonably good, with EV being at the higher growth trajectory for them. Export side, they are doing reasonably okay. So I think some of the two-wheeler companies like Bajaj, maybe TVS and Mahindra, these are the names that we like at this.
That's the view coming in on the auto sector, but let's also put the spotlight on Vedanta then. Yesterday, of course, the company and the board declared a dividend of 7 rupees per share. But apart from that, they've also come out with their annual report and they've highlighted some of their strategic priorities for the next few years. One is deleveraging. Remember, Vedanta Resources, which is Vedanta's parent company, has been deleveraging for the last several years. They've lowered their debt by $4 billion over the last 4 years, and their focus on deleveraging is likely to continue going forward as well. Demerger will be another tailwind for the stock going forward. And apart from that, they have aggressive capex plans as well. They incurred about $1.5 billion of capex in FY25. They are planning another $1.6 to $1.7 billion capex in FY26 as well. So companies' focus on capacity expansion, on deleveraging continues to remain very strong. Hemang, what will your view be on this metal counter? Hemang, this question was for you, Vedanta.
Yeah. So I was saying that metal as a pack is very well placed given the trend in the base metal prices and let's say names like Vedanta across majority of their products, be it the oil and gas, the aluminum, copper, zinc, even silver, which is doing so well. So I think they stand to benefit quite a lot. I think the hits would be that we have few of OFS across some of these companies, and depending upon at what price they finally do the OFS, you may see a bit of a pause. But from a let's say 6 months, 12 months perspective, I'm extremely positive on Vedanta, Hindalco, which has consistently been doing well. So positive view on the metal companies at this point of time.
All right, that's about Vedanta as well as Hindustan Zinc will be interesting to watch out for, because just yesterday the stock did drop almost 6.5%, while some of their base commodities like silver, they are hitting new highs for themselves. Other than that, just yesterday we have seen a stock like Titan as well that is surging past almost 2% gain coming in on this particular counter. Let's have a chart check quickly by you, Saumil. Give us some sense that how do you see the technical setup for Titan, because after a while that we are seeing a bit of a jump up in this counter.
Absolutely. It's been a little while now. In last couple of months, it's just been dragging a little on the downside. Not sharp corrections, but maybe small consolidations, time-wise correction. Now it is exactly at 200 daily exponential moving average. Taken support there, hard tops, hard bottom formation, close about 40 daily moving average. Great signs here. I think this could be one of the top picks from the large cap basket, and on the upside I would be targeting at least the minimum of the previous swing high. That would be around 3670, close to those levels, and if it closes above that, then probably it would be targeting 3800 levels.
All right, that's about Titan. Let's watch out for this counter as well. But indeed, we have the markets in the pre-open rates. That's indicating a bit of a gap down for the Nifty 50, but definitely we'll let those rates settle in for a while. And let's see how they settle in, because GIFT Nifty was indeed indicating a very mild negative for our markets then. Other than that, let's also have a look at some of the other news makers. And today, all eyes will be on Zydus Life as well, because as they have received 2 observations for their Ahmedabad facility, with 2 observations coming in from US FDA. Hero MotoCorp will be another stock within the auto pack, as the company introduced Vida X2 as battery as a service model that will be starting from 1st of July. And Vodafone Idea will be in focus as well, as Vodafone Idea and AST Space Mobile, they have announced a partnership. But Hemang, give us your sense on Vodafone Idea, because yes, it has been one of those key underperformers. We are aware of the reasons, but one of its peers, that Bharti Airtel, of late a lot of these experts have been liking the stock. So what's your sense on the telecom space, and would you still prefer buying Bharti Airtel versus Vodafone Idea?
Yeah, absolutely. I think overall, if you see, Bharti has been one of the best performing stocks, pure play, digital, and even if you compare their performance versus Jio, I think most of the parameters, be it the ARPU growth, overall EBITDA margins, and overall growth in the profitability, it's done much better. So no two ways about it. Bharti by far is the best play on the telecom. But I really want to play Idea at this point. See, people like a low price stock, particularly the retail investors. But last 5 years, if you see, hardly anybody has made money. Creates a lot of excitement when you have some news on AGR, fundraise, or all kinds of things. But by and large, it becomes a trap even if you have a small uptick. So not tempted. I think things are not looking too clear on the balance sheet front or how the company is going to survive. And more importantly, whether they will have any strategy to stop the market share loss which they are seeing for the past many years. Not comfortable buying into an idea.
Hemang, what do you make of Geofinancials and this after the news that they've acquired that 7.9 crore equity of Geo Payments Bank from SBI?
So, Aisha, a lot of promise, a lot of interesting developments happening on that front. But when I look at the market cap and the valuations, and fact that this entire space is not going to be easy to navigate. Given the fact that on the financial services side, you have very big companies to kind of compete with. So I am not somebody who wants to buy a company because it has a great promoter or pedigree. I think we should give more importance to the earnings trajectory, even from a 1 or 2 year perspective. So I am staying away from Geofinance at this point.
That and Geofinancials. But let's also tell you, Hemang, in fact, we'll thank you, let you go on that note. But let's also tell you, get you rather some more snippets from that mega exclusive chat with Times Network, Tara Group Chairman N. Chandra, saying that not all the cancellations are currently happening because of technical or safety concerns right now.